Welcome back to another edition of Special Situations Investing with Greg. This week I'm doing a deep dive on Vimeo and giving you my thoughts on what I think of this company. Check it out. Hey everyone, welcome back to another edition of my YouTube channel on Special Situations Investing and my personal investing practice. As a quick disclaimer, this video is for educational purposes only. Any companies that I mention in this presentation are discussed solely for illustrative purposes. Discussing such companies and the specifics about them is to help educate me and educate you about certain special situations. It is not a solicitation to purchase them. I recommend that you conduct your own research and identify why you might want to own the company yourself prior to your committing of any funds. I also recommend that you seek the services of a financial advisor that has considered your personal situation as your fiduciary. And then finally, may your education here grow your knowledge, improve your personal investing performance, and give you the confidence to take control of your future. Thanks a bunch for watching. Now on to the video. Welcome back, Investing Mutants. This week I'm talking about Vimeo. This company spun out of IAC in May of this last year. I think it was May 25th of 2021. And the company had a first day low of about $45.39 a share. And then since that time has essentially continued to fall. It had a little bit of a bump a couple months ago, but now it is trading somewhere around $27 a share. So almost halved in its value over about a 6-month period. And we're gonna dig into it on why I think people might want to buy it and why they might not. But before I dig into why someone might want to buy it, I want to hit the bear case first. So I'll hit the bear case, I'll identify some of the things that I think any investor should be paying attention to, and then you guys can tell me if you have differing opinions down in the chat. I would love to hear your ideas and comments about this. And then I'll give kind of the bull case on why it would be a good perspective, a good opportunity to invest as well. And then I'll let you know whether or not I'm investing in this one. So here we go. The bear case for Vimeo. So Vimeo, because it was spun off by IAC, it is spun out of a company that traditionally is very good at acquiring businesses that are kind of in emerging fields. But then they go ahead and they sell or get rid of their subsidiaries in a way that is beneficial to IAC's shareholders over time. And so sometimes the companies that they spin out have a lot of debt. That's not necessarily the case with this one, but Vimeo was spun out at a valuation that I considered to be a little bit rich at the time, and now it's starting to get a little bit more reasonable in price. Unlike some of the other online social media type companies, and that's what most people would associate online video to be associated with, Vimeo is not that type of a business model. It is a software as a service model where the creators are provided with an opportunity to learn and to grow, to have all the tools of basically a one-stop shop for video creation. I don't personally use Vimeo's products myself, but I do know people that have used it, and they really like the setup that Vimeo provides, and Vimeo continues to bolt on additional products and features for the individuals that are using it. They do have a freemium business model, so they continue to have this freemium model that then drives actual sales of enterprise and individual users, and they use that to kind of drive their business growth. And not necessarily a bad thing, but sometimes when you have freemium models, sometimes you have people that will always be kind of they'll be kind of a drag on resources. But in the case of most most software businesses, you've already made the product. If you can allow people to have a watered down version of the product that may eventually someday purchase from you, then it's great advertising. understanding that it's a software as a service model should cause most people to take a step back before they start making a direct comparison with YouTube. That doesn't necessarily mean that they can't, but they need to think about it as a software as a service model that might be more like a Shopify or some other business model that allows people to use their product, and it's kind of an all-in-one, one-stop shop business. I spent some digging, or I did some digging on this. They only have a couple of years of data out there right now on Vimeo. However, I did find that Greenblatt's EBIT number for this would be about 114 million. Now, with an enterprise value of just under 4.5 billion, this means that the EBIT yield for the enterprise value is about 2.5, almost 2.6%, so 2.59%. So when we're buying Vimeo, we are buying the growth, and so management is projecting a growth rate of about 30% for revenue year over year for the next 5 years. They're also projecting that the average revenue per user should grow at about 15% over the next 5 years. Now, anytime this margin is squeezed, you're going to see a drop in share price, as was observed over the past 6 months from about May on. And that's part of the reason why you're probably seeing the share price fall as much as it is. And if management can deliver this price, then I can see, or deliver this revenue growth, then I can see the share price rising to about $68 per share. If they can't, then it's probably pretty close to about a 20% growth model right now. And that just tells me that, you know, sometimes when you have fast-growing industries, it's really hard to identify how valuable the company is based on these things. And with a short runway, it's not necessarily the easiest identification for it. So it might be something that you want to put a small percentage of a portfolio in, but for the bear case, if they can't meet those 30% return rates over the next 2 to 3 years, it could be devastating to their share price, even more so than it has been so far. For my bull case, I have a couple of things that I think are important. First and foremost, you should understand you're watching a YouTube creator, and so because you're watching a YouTube creator, my opinion of video is that it will continue to be more and more valuable over time for the internet. In fact, I believe that the internet itself will continue to drive towards video creation, which is part of the reason why I started doing this channel, as opposed to doing a blog or anything else. I see that this is the direction that a lot of online content creation is going to take. That being said, which platform is going to win out? Because this is a relatively saturated market when you have YouTube is kind of like the primary big dog in there, and then Vimeo the underdog, and then you have some of these other companies that do partnerships with the YouTube and Vimeo, and then they use that as their streaming service or their online events activity, and then you have Facebook, and you have all these other companies that are most likely going to try to have some sort of piece of the pie when we talk about video. Now, with that bull case, that may mean that Vimeo might be a great acquisition target at some time. However, I don't like to use an acquisition opportunity as a reason to invest in a company, so I'm not going to analyze that portion of it. Vimeo does have a differentiated case, or a differentiated product mix. Their product mix is more focused on creating great software as a service for anybody that is actually creating stuff, and they want to make it as simple and easy to use as possible. And for that reason, a lot of companies may use them not necessarily because they're the easiest or the cheapest, but because they have the products already out there that make it easier for a creator, a content creator, for internal to a company to just create the products that they need in order to conduct their business. the things that I think of that just come to mind that I know that Vimeo could use, or a user could use Vimeo for, would include training and development for a human resources office, or maybe a CEO or management team that's trying to talk to their employees and investors. So I can see that as a valuable way to approach it if you don't want to have the follow-on social media effect of a YouTube for your clients or your employees or your investors. One of the more interesting things that I saw as I was digging through Vimeo's investor relations page was that I saw that they do month-over-month reporting of their growth rates, which I've only seen a few other companies do this. The one that's most notable to me is Progressive, and Progressive Insurance. They took the perspective that if we're going to be subjected to quarterly reviews, then we're going to go ahead and give you month-to-month figures to help smooth out the business model. And I think that with that is a good piece of the pie if you want to really demonstrate that you have openness. And in my view, a management team that is willing to do something like that tells me that they're willing to do things to go above and beyond to try to get shareholders to be interested in them, and that could turn into a valuable team for someone who wants to invest with this company. Like I said earlier, I do think that Vimeo is kind of like the Shopify of the online video market, and I can see them continuing to make inroads into the video content creation world with their business model. And because it cash flows, it may make it easier for them to continue to develop high quality products for their customers. One of the more interesting things I saw as the reason why this might be a good bull case is that the company in their monthly reporting continues to show a year-over-year growth of their customers and of their revenue growth of about 15% at least or more. And to me, that tells me that this company, they may be able to perform quite well over time, over the next 5 years. And this might be the one moment where you have this purchasing opportunity that may rocket this company to the moon. In conclusion, high growth industries and high growth companies usually attract additional investors and additional people. I don't know if Vimeo has the moat that I would be looking for them to stay on top of their game, and there are other companies out there that may be able to compete directly with them, say YouTube or other companies like YouTube that may be able to lower that or degrade that value that they're creating for their individual customers over time. Currently, I'm considering a fair price for this company to be about $38 per share. That represents about a 40% discount at $27 a share, and so I can definitely see this as an interesting play over time. In full disclosure, however, I am not purchasing this company. I think my price target will be closer to about $20 or less per share for the company, because I want to make it so that I can expect it to double over a 5-year period. That being said, I appreciate your comments, guys. If you like or dislike what I'm saying, please let me know. I would like to hear your inputs on this, and let me know if you're investing in this one and whether or not you think where you think it should be over time. And we'll catch you next week.